And local trade poised for another day of gains. The local index rebounding yesterday, recovering from Monday's losses on renewed optimism that the Federal Reserve is close to ending its interest rate hiking cycle. Well, the likelihood of measures in China to support the country's battered real estate sector also boosted sentiment. Well, let's get an update now on how the trajectory looks at the JSE. We're joined by independent markets analyst Jimmy Moyaha. Jimmy, good morning to you. Thank you very much for your time. The Rand seems to be holding on to the gains so far this week. Is that your sentiment, and perhaps what's driving it?
Morning, Tony. Morning to the viewers. Absolutely. Rand sentiment at the moment, we saw that the Rand gained more than 1.5% against all the majors yesterday. It looks to be holding steady today. We've seen that overnight going into Asia trading session and coming out of US session. Equity markets were in the green, and that's been filtering through to our local bourse as well, opening up in the green as well. Commodities are in the green. So by all accounts, it looks as though the news we got out of the Fed on Monday around the potential end to the rate hiking cycle has reinvigorated all the markets across the board. But of course, we do know that all-important data points from the US is coming out today. That is the CPI figure coming out. We expect that CPI is moderated. We saw that we've already gotten CPI figures out of Spain. We've gotten interest rate decisions out of New Zealand up to this point in the morning. But we know that the most important data point for this Wednesday in particular is going to be what that core CPI and that CPI number looks like from the United States, because it'll give an indication as to whether or not we are on the path that we believe we're on. We've seen in the past that CPI figures or inflation figures out of countries like the UK have come in higher than expected at missing estimates and that sort of thing. So this one is going to be very important because we're expecting that CPI, or at least headline CPI, is moderated from 4% down to 3.1%, with core CPI coming down from 5.3 down to 5%. If that data comes through as expected, it suggests that the Fed's inflation targeting mechanisms have been effective or are continuing to be effective, and that they may have a handle on the inflation picture. We know that the inflation picture has been sticky for a number of months, if not years at this stage, and it's very much a function of what the data will say before we can determine whether or not the data is accurate. But if all things remain as they are and the data comes in this way, you're seeing that the market is already starting to say, okay, this looks like a better picture. The terminal rate might not reach the 6%. It might actually stay at the 5.6% that has been previously predicted. So we'll have to wait for that data later this evening to see what it actually means. But at this moment, markets are eagerly anticipating some positivity from that data.
Let's talk commodities. Oil edging higher in early trade, extending the gains for a second session. Talk us through the factors that are driving this price surge.
Well, obviously, sentiment around the state of economic recovery globally. We're looking at the fact that we're still getting higher crude oil stocks out of the U.S. as well. I think a number of things have been at play on the oil price side of things, especially if you look at the fact that those recent production cuts rather, that were announced are coming into effect this month, and we know that they could in all likelihood be extended to August as well. So that's definitely something that markets are digesting, to say that at the moment we're seeing stockpiles are increasing. We're seeing that demand might be starting to steady or hasn't picked up definitely at this stage. But we're seeing that if we avoid a recession, as we anticipate that this US data might suggest that we might see, then it's probably will in all likelihood result in a positive sentiment for economies around the world. That whole sentiment picture at this stage that suggests that we might avoid recession, we might see demand start to pick up, we might see conditions start to moderate, is boosting all things in the markets. It's not just the oil price, but again, the oil is then compounded by the fact that they announced those production cuts, and that will then obviously reduce the amount of supply in the market and then allow demand to start to recover as well.
Let's talk company news. Tharisa publishing a production report for the third quarter, which ended on the 30th of June 2023. Help us make sense of those numbers.
Certainly. So Teresa announced that they increased the production on certain things. I mean, the PGM output increased marginally, while the chrome output was down just a little bit. So they've mentioned in the production report that they've benefited from the fact that they have a diversified approach to the commodities mining side of it. We know that PGM prices have been under pressure for a significant period of time, and we've seen that across all of the PGM counters, not performing at the best levels that we've seen from those shares. But we've definitely noted that this is as a function of the overall pressure that's on the PGM sector from a demand point of view, and with the shift that we've seen from internal combustion engines to obviously electric vehicles. But also alongside that, we're seeing that despite the production demands having sort of tapered off, we're still seeing increased sales in terms of new vehicle sales and overall vehicle sales around the world. So markets, and Teresa in particular, have also noted that despite the fact that the PGM counters remain under pressure, the PGM pricing remains under pressure, we're still seeing that there is some level of demand that we're hoping will return to the markets as things start to moderate, as conditions moderate. Again, if we look back to the overall inflation picture and the recession picture and the overall production picture from a global scale, if we start to see that the inflation situation is moderating in the US, moderating in other countries, moderating from a production point of view, you could see that demand could also start to pick up. Obviously, China's been a big factor in the PGM space as well, because their demand side of things has been significantly lower than where we anticipated they would be this time in the year, and that has resulted in lower pricing and obviously lower trade on the PGM side of it. But by all accounts, Teresa saying that they are happy with the cash position that they're on. They also increased that cash position by some $30-odd million. Chrome production down marginally, but not so much of a concern, but it is offsetting against the major sort of slowdown and that pressure that they've seen in the PGM space.
Yeah, let's conclude the conversation with Sasol. In an antitrust finding that may raise questions here, Jimmy, about the effectiveness of the energy regulator, the competition watchdog is claiming that Sasol has been charging excessive prices to its customers for almost a decade. Talk us through those findings and perhaps possible consequences.
Those are some interesting findings by the Competition Commission that, on average, Sasol has been importing sort of gas from its pipeline through Mozambique into Secunda, and they've been, well, according to the Competition Commission, they've been overcharging some of the gas providers that provide the South African consumers in as much as anywhere from 49 to 55 to even 72% in 2022. Obviously, Sasol has yet to comment on this. They've said that they are going to appeal the findings and take this decision up on appeal, but they've also alluded to the fact that the Competition Commission's jurisdiction on this is fairly limited, as you rightly mentioned. It is the responsibility of NERSA to be overseeing this and enforcing this. We know that Sasol recently wanted to implement a 96% increase or had applied for a 96% increase through NERSA on the gas prices. That has been halted since primarily due to the conditions that we're seeing in South Africa and the difficulty that it would then present for South African consumers if that tariff increase were to be afforded. So it's interesting here that this has been ongoing for quite some time, and we're seeing that these claims are for the last 10-year period. If you look at Sasol's actual earnings from their gas revenues in 2022, that was to the tune of some 6 billion rand. And if we do see some condition or some penalties being imposed, we know that the maximum that can be imposed is 10% of revenues, which if we look at the markup that Sasol had been putting on the gas prices, the 10% should be something that would be well within the markup that they had been putting on the market. They are, of course, as I mentioned, going to study this particular judgment or this particular decision that has been afforded by the Competition Commission, and they have said that they want to review a couple of things before they provide an official comment on their side as to their standpoint on the situation.
Jimmy Moyaha, thank you very much for that markets update. Independent markets analyst there.